Hi everyone, just a quick explanation of Gbpusd trade that happened on 29th of August, so it's kind of a week ago. It's a very simple approach that I use, it's a very simple method and a very simple analysis. So I'm going to break down the whole analysis. You're gonna see how I saw the chart and why I decided to go short there, and the next thing that you can see we can go into the longs as well. So I'm going to break down everything I see and explain. So we have Gbpusd on 15-minute time frame. Now looking from the left side, as you can see from there, you can see we are inside of the price lag from this high to this low. So this inside movement, so everything here, so this price section is internal liquidity, right? And we have external liquidity above those highs and lows. So I'm gonna mark up this. So we're gonna mark up this very low and this very high. So above this is external liquidity and below this is as well external liquidity. Now we have to consider, we have to see the situation presented in front of us. So we are currently there. This is the current price section. We are in the replay mode because I'm explaining the trade that already happened. So I'm going to explain the whole analysis. Now, what we have here is basically, we have this move to the upside that broke the structure down. So this very low created this very high that got broken. So this is BOS, right? So we have the first confluence to go into the shorts. Now, in the terms of liquidity, because market goes where the liquidity is, so we have to see where can be our possible target. Okay, so given the fact that we have pushed higher to broke the structure there, we have to see if we have liquidity below the lows or even inside of it. So in this case, we have this very low. So this low created this high created this low, and this low created this high. Now I'm going to focus only on this low. So we have equals, as you can see if I zoom in. Oops, let me zoom in for a bit. You can see that we have equals, so we have this low and this low. So this is liquidity, equal lows, right? Because if you're gonna look at the terms of support resistance, like majority will see this as support. So everyone that bought here at the bottom and there and this second leg have stop losses below it, obviously, right? So this is liquidity and our possible target. Now, where we can go in, given the fact that this impulse move broke the structure and broke the previous low, we always have to look at the beginning of the impulse move. So beginning of the impulse move is this here, so at the very top. Now this is the order block because this is the last up candle prior to sell-off, and this is the order block where my entry is going to be. But not every order block is good order block, right? So the order block that sweep liquidity on the left side is good order block for me because liquidity has already been swept to the left side. So there's no reason for price to go even higher than this at the very moment. Okay, so we have a sweep. We have a sweep here prior to break of structure, and then inside of it we have the imbalance as well, right? So the price can cover the imbalance. So this is inside of this long candle from this week all the way to this one. Right, and the order block entry I'm gonna use, we can use like the bottom side, or when the candle is kind of big, we can always measure the 50% of it. So in this case, I'm gonna measure the 50%. Okay, so from the bottom and to the top. I'm not taking the wicks here, just the body of the candle where price actually was. So closing and opening, right? Okay, so we have the 50%, we have the price number which is 26.27. I'm gonna round this to 27 sharp, like that, right? So this is going to be my potential entry. Now, in a sense of other, let's say confluences, so we have BOS, we have sweep, we have imbalance, we have order block, we have price number which is 20, just 7 pips below, and we have inducement. So this is the last confluence I'm using. So it's inducement. So the inducement is that everyone who sold there, like the impatient traders, are going to be taken out in most of the times, right? It's not always like this. So my short position is going to be placed on this number, stop loss just above the high. So we're gonna have fairly, let's say 10 pips, and I'm going to target 1 to 3 risk reward ratio because this is my fixed target no matter what. Okay, so I'm gonna just target 1 to 3 risk reward ratio. We know that ultimate target is going to be this liquidity down below, right? This can be ultimate target, which in fact it can be, if we, let's see, we have 5%, almost 6% to the downside. So let's say 6 is this very low. I'm gonna mark up this as a target as well, like that. And but fixed TP 3%, right? Can't argue. Now let's see what happens. Let's see what happens. Okay, so this has been met, taken out. Now the news, we had news events in the New York session, obviously, because we had a great deal of volume in it. As you can see, this push to the highs. We kind of took, you know, the entry to the T and sold down. So in this case, TP will be hit about 3%. Now let's see what happened next. Okay, once again. So that's why I'm saying, as you can see, 3% fixed is the way to go for me personally, because it's, you know, according to my trading plan and trading management. And if I can get 3% fixed, that's it, call it a day, and then move to the next trade. Not being greedy here, just taking, you know, following my plan, and that's about it. So we have rejection in the news, we sold down, it was, I think, almost 4%, it was 4%, almost 5% at the end of the day, but it is what it is, 3% in the pocket, it's still good, right? Okay guys, so this is quick explanation of the video, of the technical analysis. I hope you like it. If you're gonna have any questions, just let me know in the comments. Make sure to subscribe and like to help algorithm grow, and I'm going to do even more videos about that. So I'm going to share the knowledge with you, and that's about it. Thank you for watching and see you in the next one. Bye bye.